Holy schmalolians, man. That's a word I just made up. But after hours, Crowdstrike reported earnings, right? Up 10.85%. What the crap's going on out here? I mean, this stock's taking off like no one's business. We're going to take a look at these earnings and see what's going on with this thing. Why it's taking off, going to the moon after hours. Do need to mention, too, stock's already up 186% year to date. Pretty wild, if you ask me. I think that's really good performance, and to see an extra 10.8% up after hours is, I mean, it's pretty darn significant. You can't lie to me. That's quite a bit. So let's take a look at these earnings. Let's just do it. What's going to happen? Non-GAAP EPS of 8 cents, beats by 8 cents. Was expected even there. And a GAAP EPS of negative 11, beats by 1 cent. In my perspective, not really anything exciting going on there as far as the EPS line. That doesn't excite me too much. I don't really get out of bed for that. Still a negative EPS line, not a big beat, but really good improvement overall, as we'll see every year. So still like to see. Can't wait to get positivity going on there. Revenue of $232.46 million. Which is up 85% year over year. 85.8% year over year, beats by 18 million. So good improvement year over year, obviously. And the beat's pretty good as well. Pretty nice. And we see 907 in annualized recurring revenue, and net new annualized recurring revenue of 117 million is pretty solid. No doubt they added 1,186 net new subscription customers. As far as the guidance is concerned, always a good thing to look at. Revenue of 245 to 250, adjusted operating income of 18.5 to 22.1 million, and adjusted EPS of 8 cents to 9 cents. So pretty good stuff. Even better numbers expected next quarter, except for from a non-GAAP EPS standpoint. They're given pretty much the exact same of what they put up this time. For the full year as a whole, they're expecting total revenue of 855 to 860, and a adjusted EPS of 21 cents to 22 cents. So it is positive in terms of the adjusted standpoint. So you do have to look at that. Pretty good in that stuff. Annualized recurring revenue, we saw 907. That compares to an 853.8 consensus. So really good to see on that aspect. Customers with 4 or more modules increased 61% year over year. 5 or more increased 44%, and 6 or more increased by 22%. Really good to see that, because obviously more modules is higher revenue for this company, because the more modules you use, the higher they're charging as far as the service is concerned. So really good to see that growth. Q4 again, we saw that consensus was only 231 million. So. And consensus EPS was only 1 cent expected. So really good to see that. We'll look at this press release, because I think it's pretty darn important. Let's see. We're going to find any data that we find pertinent, obviously. So, obviously, we saw a lot of this already. As far as the data is concerned, subscription margin, gross margin was 77% compared to 74% in the third quarter of last year. So, improvement in terms of margin. GAAP loss from operations was $24.2 million compared to $38.5 million from last year. So, there is improvement. It's not, significant improvement, but there is improvement. It is still a net loss, but they're coming more towards positive, which you have to like to see. Non-GAAP income from operations was 18.9 compared to a net non-GAAP loss of 16.5. So from an adjusted standpoint, they've turned profitable year over year, which is good. Net loss as a whole, 24.5 compared to 35.5. So again, a little bit of improvement there. Nothing super crazy though. So highlights, as we saw, these top two we already listed. They acquired Preempt Security, a leading provider of zero trust and conditional access technology for real-time access control and threat prevention. They announced multiple new modules and capabilities, including Falcon Horizon, Falcon Forensics, Falcon X Recon, Falcon Zero Trust Assessment. That Zero Trust Assessment comes here from Preempt Security. And this is a company obviously really focused on cloud security, really important stuff. Internet security is really massive, and companies doing a lot of transactions and important business deals online need a lot of security. They need everything going on, right? They announced an alliance with EY to transform cyber risk management capabilities. The new alliance will help enterprises identify, prevent, and respond to cyber threats. They joined the ServiceNow Service Graph Connector program. The new integration provides users the ability to integrate device data from Crowdstrike Falcon platform into their incident response process and improve both security and IT operations. So really quick there, ServiceNow, obviously how you submit tickets for people to fix said tickets. So good to see that you can implement your data right then and there. And they expanded support for Amazon Web Services with integrations for compute the compute services and cloud services categories. So really good. We saw the guidance here too. Other than that, there's nothing super crazy on this press release. We'll take a look at the balance sheet. Ooh, right here, centralized in the middle of the page. They give me a 9-month comparison. Thank you. 1.3 billion in total current assets compared to 1.1 billion 9 months ago. Not crazy improvement there, but cash and cash equivalents increased quite a bit as they got rid of some of their marketable securities, turned it into cash and cash equivalents. Total assets in general of 1.7 compared to 1.4. So a growth of around, really right around 350 million there. From a liabilities perspective, you see total current liabilities, it's at 702 compared to 493. And total liabilities in general is at 934 compared to 662 million of 9 months ago. So there you see overall assets did rise a little bit further than your liabilities. So total stockholder equity is at 814 million compared to 742 million. It's not my favorite balance sheet in the world just because I don't think the size of the balance sheet is that impressive. The size of it is not that impressive. That's what she said. It's unfortunate, but yeah, I know it's unfortunate. Just trust me. You don't want to live like this. But the balance sheet's not quite what I wanted. As far as purchasing this company, again, I don't think it's I think there's a reason why investors are buying this after hours. I think there's some good stuff going on with it. They posted really good numbers, and the guidance is really good. Annualized revenue, though, again, you need to mention they're expecting $880 million. Market cap of 31.1 isn't the most outrageous valuation. I've seen a lot more stretched valuations before, and this company is doing a lot of good business. So I don't think it's crazy. I don't think it's necessarily a buy at these levels, mostly because it's still floating literally at its 52-week high. I don't like that necessarily. I wouldn't like to see it at its 52-week high personally if I were me. But that I don't typically buy stocks at their 52-week high. So that's just me there. Hope you had a good one and have a good time.